Mark, how's the swing trading program going this week?
Today we're going to talk about risk management. Here in flyover country, the weather can get nasty, just like the markets. And when you have an exotic car like this, we don't want to expose this asset to damaging weather. So in swing trading, we use lagging data such as moving averages and oscillators to determine how and when we deploy our capital, just like when we use the weather data to determine if we can take our exotic car out for a drive. Our swing trading indicators give us an idea of market direction and momentum, but have no idea if there's a storm on the horizon, like an earnings announcement or a Fed rate decision. It's up to us to inject this knowledge into our trading plan. Today we have an FOMC meeting, which is a storm on the horizon. The results could cause the market to fall dramatically. I have no way of knowing the outcome. So even if there's some potential swing trade setups this week, I decided to be patient and avoid the storm and not enter any additional paper trade positions until the storm passes. I'm risk adverse. I'll keep my powder dry and in the garage, just like this exotic car, until a better day comes.